This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Secretary General Haytham Al-Ghaz said the group's agreement to reduce production has helped address challenges facing global oil markets, Iraq's oil ministry quoted him as saying on Tuesday. Al-Ghaz, who is on a visit to Baghdad, added that OPEC's most important target is to achieve stability and balance between supply and demand. Last November, with oil prices weakening, members of the OPEC, together with Russia and other allies, a group known as OPEC Plus reduced its output target by 2 million barrels of oil per day. That was the largest cut since the early days of the COVID-19 pandemic in 2020, and the same reduction applies for the whole of 2023.
Oil rose on Tuesday, extending a recovery from a 15-month low hit the previous day, as the rescue of Credit Suisse eased worries about global banking sector risks that could hit economic growth and fuel demand. After jitters initially on Monday, the mood across financial markets has lifted in the wake of UBS takeover of Credit Suisse and after major central banks said they would enhance market liquidity and support the banking system. Brent crude was up 52 cents, or 0.7%, at $74.31 per barrel at 0910 GMT. U.S. West Texas Intermediate, WTI, also gained 52 cents, or 0.8%, trading at $68.16.
Moving on to the top news in the energy sector.
France is planning a renewed push for recognition of nuclear-derived fuels in European Union renewable energy targets, setting up a potential clash between countries seeking to approve the goals this month. Negotiators from EU countries and the European Parliament are preparing for March 29 final negotiations to agree more ambitious EU targets to expand renewable energy this decade. The attempt to slash Europe's contribution to climate change and help countries end dependency on Russian gas have been deadlocked, however, by a dispute over whether fuels produced using nuclear power should be included in the targets, with France now poised to present a fresh proposal on the matter.
Group of 7 nations are not likely to revise a price cap on Russian oil this week, 2 European Union officials and 1 official from a coalition member told Reuters on Monday. The G7 was due in mid-March to revise the price cap put in place in December, but the officials said EU countries' ambassadors were told by the European Commission over the weekend there is no appetite among the G7 for an imminent review. Some EU countries including Poland have sought to lower the G7 price cap level to further restrict the revenue Moscow can use to fund its war in Ukraine. Next, we have the top news in metal markets. Switzerland's exports of gold to China and India rebounded in February as bullion prices fell, Swiss customs data showed on Tuesday. Switzerland is the world's biggest bullion refining and transit hub, and its data provides insight into global market trends. It exported 58 tons of gold worth 3.2 billion Swiss francs, $3.5 billion, to mainland China in February, up from 26.1 tons in January and the most since December. It sent 25.6 tons of gold to India, up from 3.2 tons in January and the most since September.
China is considering cutting its crude steel output by about 2.5% this year, said 2 sources familiar with the matter, as it extends a 2-year-old policy to curb emissions by the world's largest steel sector. The target was proposed by policymakers at a meeting last week but has not yet been finalized, said the sources, who attended the meeting but sought anonymity, as they were not authorized to speak to media. State planner the National Development and Reform Commission did not immediately respond to a request for comment.
We will now look at the top news in the agricultural sector.
Modest growth in the animal protein sector is expected to raise China's soybean imports to 97 million metric tons, MMT, in marketing year, May 23/24. The People's Republic of China's PRC removal of COVID-related restriction in December 2022 is expected to boost overall oilseed consumption. However, Relatively high prices for soybean meal, SBM, and low returns in the swine and poultry sector continue to disadvantage SBM inclusion in feed. Following a significant increase in soybean area and production in May 22-23, PRC policies supporting soybeans are expected to continue, yielding an additional 400,000 metric tons (MT) of production in May 23-24. That is all for today's news on commodity market. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.